Hello and welcome to Devil's Advocate. How worrying is the economic situation facing the country? How real is the government's commitment to reform? Those are the twin issues I shall discuss today with the Deputy Chairman of the Planning Commission, Montek Ahluwalia. Mr. Ahluwalia, let's start with the state of the economy. In September, industrial growth fell to just 1.9%, its lowest in 2 years. Inflation is at 9.73%, its 10th month above 9%. And last year, FDI was 25% below what it was the year before. Would you accept this is a worrying situation?
Well, look, this is a worrying year for the whole world. I think one of the problems when we discuss economic issues in India is that we seem to be discussing them purely from an Indian perspective. So let's get the facts right. 2011 is a bad year for the world economy. It was not expected to be all that good, but with the explosion of the Eurozone crisis in the middle of the year, everybody's growth rate has been disrupted, capital flows have got disrupted, and wherever you look, economies are growing much slower than they had hoped. But that's true for India also.
But if you focus on the Indian economy and you look at what has happened to industrial production in the first 6 months of this year, it's just grown by 5% compared to 8.2% last year. That suggests that this is a well-established downward trend.
Well, for the current year, it certainly establishes a slowdown. You know, we have not denied that. I mean, let me say that at the start of the year, the budget was calibrated on the assumption that perhaps the economy would grow at 9%. Since then, we lowered the forecast. When the approach paper was discussed a couple of months ago, we thought it would grow around 8%. Now we're talking about 7.5%. So it is a slowdown.
Deutsche Bank, by the way, is talking of growth of just 7%.
I think the range between 7 and 7.5, and it's very difficult to tell what would be right. Let me say that when the economy slows down, there's a tendency to think that, you know, this slowdown might continue maybe for another 3 months before it turns up. So it's extremely difficult to know when the turnaround will.
In which case, what is your best estimate, or maybe I should say guesstimate, for what GDP growth this year will be? Clearly, 8% is out. Many people think even 7.5 is difficult.
I would say that between 7 and 7.5, you can take your pick. Let me say, from my point of view, I don't put much store. I mean, it's not our job to do short-term forecasting. I don't put much store whether 7.5 or 7.25 is going to turn out to be correct. To me, the most important thing is this is a short-term cyclical slowdown. We have to do something to reverse it. It's not something that will get reversed automatically.
I'll come to what we do, but let's go through some of the other factors that are affecting the Indian economy. The second important concern is inflation. It's stubbornly above 9.5%, and clearly the Reserve Bank strategy for tackling it isn't working. Would you accept that the government doesn't really have a clear idea of what to do about inflation?
No, I wouldn't accept that. The government is certainly worried about inflation. It's true that inflationary pressure is higher than what we had thought it would be. The RBI has taken a number of steps. It's too early to say that it's not having an impact, because, you know, all the research shows that monetary tightening takes at least 3 to 6 months.
Except that you've been monetary tightening over 19 months. Absolutely. You've done it 13 times. You've increased it by 375 basis points, and inflation has shot up every month.
No, but the point is that we were tightening from a position which was very, very low. Again, we started the tightening at a time when there was a lot of global inflationary pressure. That now has eased a bit. So I think the current assessment, Rangarajan is quoted, for example, in the newspapers today, and I agree with that assessment, that maybe by the end of the fiscal year, which is really March 2012, you will see inflation coming down.
The problem with these predictions, you quoted Dr. Rangarajan's prediction, the RBI governor has made a similar prediction, you and Kaushik Basu have been making such predictions for a year and a half yourself. The problem with these predictions is that they never come true. I put it to you that these predictions alone have damaged the government's credibility.
No, it's absolutely true that we have been hoping that this would happen earlier. And to that extent, our credibility becomes questioned. And we should recognize that short-term forecasting is subject to error. But let me say, I do not think that we will have the same problem this time around for 2 or 3 reasons. First, there's been a lot of monetary tightening. 2, global inflationary pressures are now not there. Nobody thinks you're going to get another increase in oil prices. Metals prices are already coming down. I don't think there's going to be pressure on food prices. And finally, I think a lot of the supply side, what is happening on agriculture is actually quite good. So I expect that from January onwards, you should begin to see a slowing down of inflation, and hopefully when the figures for March come, it could be 7.5%, something like that.
People listening to you will take confidence, but they will still say to themselves that they've heard this prediction from you or Kaushik Basu or Dr. Rangarajan so often that if the government won't admit that it hasn't got a clear strategy, then they feel this government is hoping against hope, and chances of it turning out to be correct are 50-50 at best.
No, I mean, I can't blame people for saying we've heard that before, because we've said it before. But I do think the test of this is do the show again in February. And if by February you will have the January data, and if it turns out that inflation is not coming down by then we really don't know what we're doing.
All right, if inflation hasn't begun coming down by February, then the government really doesn't know what it's doing. Your exact words.
I regret to say that I would have to admit that.
You'd actually have to eat your pagri at that point, wouldn't you?
Absolutely. And let me say that, either we're watching this very closely. My internal assessment is that when the data for December become available, which would become available in January, they will show a significant beginning of a decline.
And if
so in January, we will know whether it's working.
And if not, the government is in serious trouble.
If not, the government should be doing something else, yeah.
All right. Let's then come to the third problem that affects the economy, and that's the fiscal deficit target. With growth slowing down, with tax collection less than the year before, with oil prices higher than the year before, and with your disinvestment target unlikely to be met, do you really believe Pranab Mukherjee can make his 4.6% fiscal deficit target?
I wouldn't actually expect the government to meet the 4.6% fiscal deficit target, and I know the finance minister has been very careful. He has said, I can't say now, but I'll go a little further, and I think some of his officials have done that. The truth is that when you set a target, it's what you call a structural fiscal deficit target, which means if everything goes as planned, the fiscal deficit will be 4.6%. If there is a growth slowdown, then actually to retain the same fiscal stance, you do see some deterioration in the fiscal deficit. How much deterioration? This only the finance ministry can tell.
Well, let me put this to you. Analysts are predicting that the deterioration could be as much as 5.5%, a whole percent above the target.
1 percentage more.
That's right.
That is not impossible in my view, and quite frankly, I'm sure the finance ministry has more information. Part of the problem with that projection, by the way, is that it assumes that all the expenditure that is planned in the budget will take place, but then there are some unexpected increases in subsidies and so on.
Huge increases in subsidies.
It may not end up, I don't know what the budget will show, but I would certainly say that given what we know has happened, oil price increases and et cetera, a deterioration of up to 1 percentage point of GDP, if all these things are reflected in the budget, cannot be ruled out, but it's quite possible.
So you wouldn't be surprised if the fiscal deficit comes in at 5.5%?
Well, that depends on what happens on expenditure.
Suppose it goes higher than that?
I doubt that will happen.
So somewhere around 5.5 is your expectation?
Could be less, because we don't know. One of the things that happens, I must explain this, is that the budget builds in a certain amount of expenditure. There are very often reasons why that expenditure cannot take place. So what happens is supplementary demands are placed in Parliament so that other expenditures can take place. Now, if the finance ministry wants to avoid an increase in the fiscal deficit target, they can just hold back on these.
Absolutely.
I don't know what they're...
What you're actually hoping is that the government won't spend as much as it's budgeted to spend, so that your deficit isn't as bad as it could become. That's really what you're hoping. In other words, cutbacks is the only thing that can control the fiscal deficit, nothing else.
I think that's substantially true when you're going through a shortfall.
Let me come to a fourth problem that faces you. The continuing Eurozone crisis and the economic uncertainty in America has meant that export growth has slumped to just about 10%. As a result, your trade deficit is hitting 93.7 billion. Some papers say it's the highest it's been in 17 years, and the projections are it could cross 150 billion before the end of the year. That's another worrying situation, isn't it?
Well, it's certainly true that export growth in the last couple of months has slowed down. I think the trade deficit figure is subject to I believe there are some data problems. There always are data problems. We've looked at the picture, and it may not be as bad as what you say it is.
But it could still be, you're not sure?
It is our expectation. It is my expectation that the trade deficit this year will be higher, but I don't think that the external financing that we have would be able to handle it.
Except for the fact that the trade deficit is going to keep your rupee weak, and a weak rupee is going to add pressure to inflation, so it has a cascading effect on all the things you want to correct.
Sure. I mean, if you're running a market-determined flexible exchange rate, that's one of the signals that you get to see in the market. How much weak, that depends on whether markets overreact. So I wouldn't judge too much on that score.
The problem with the markets is that Moody's has just downgraded the outlook on Indian banking to negative, and with government yields on debt hitting 9%, websites in America are asking whether India might be going down the Italy or the Greece route. Now, that's unlikely, but what it shows is that confidence in India is dented.
Well, it's not just unlikely, it's absurd. I think what the rating agencies are doing is they were caught, in my view, very seriously wrong by completely failing to spot the sovereign debt crisis in Europe. They spotted it very, very late. They're covering up so that they can downgrade. And they downgraded the United States, so quite frankly, downgrading the Indian banking system is just part of the knee-jerk response.
You don't think this is a loss of confidence or a denting of confidence in India?
No, it's sending up a warning signal because they don't want to be caught not having sent the warning signal.
Is it a warning?
But let me say, the warning, our economic position, as is the case with all countries, has weakened because of the Eurozone. We face new challenges, and there is an erosion of confidence, not just in India, but in the global system. Animal spirits are down. Investors are choosing to be liquid rather than putting money into projects. So everybody faces this problem. We do have a problem, but I would not read too much on the downgrading of the banking system.
All right, let's take a break at that point and ask, is there a silver lining that we can discern on the gloomy horizon, or is that just illusory? All of that in a moment's time. See you after the break. Welcome back to Devil's Advocate and an interview with the Deputy Chairman of the Planning Commission, Montek Ahluwalia. Mr. Ahluwalia, if there is a silver lining on the dark and gloomy horizon that stretches out in front of us, it must be the fact that the government is beginning to talk about reforms, and people believe that it might be ready to bite the bullet of second-generation reforms. The real talk is about the possibility of FDI in retail and permission for foreign airlines to invest in domestic carriers. But is that for real, or is it just talk?
Well, in the case of FDI for retail, as every newspaper points out, the ministry concerned is bringing a note before the cabinet, so hopefully we will know what the decision is.
Do you really believe this is for real? Because in May, Kaushik Basu headed a committee that came down in favor. In July, the committee of secretaries was in favor. In August, Anand Sharma said he was in favor. And then you had newspaper headlines saying it wasn't going to happen. Now talk is revived again.
I think in all our efforts at reform, we have tried to bring about the maximum amount of consensus possible. So while there's been a lot of consensus, in my view, in the government, there's been less of a consensus in the political class. And therefore it's not surprising that they have a few more consultations and take a little bit more time. So, you know, if as a consequence of doing more consultations, you get something done where nobody says they weren't consulted, and it takes a few months longer, it's no big deal.
But what's your hunch? Do you think we will see FDI in retail before the end of this calendar year?
Well, look, I've been in favor of it for the last 6 months, and I hope that will happen. But, you know, what you're asking me is, will the cabinet support this proposal? And it's not proper for me to prejudge. My view is it should happen. There's no question.
So you're hopeful? You're hopeful?
Well, I'm always hopeful that things I think are good things are going to happen.
What about permitting foreign airlines to invest in domestic carriers? Is that likely?
I think that's a good idea, but I'm not aware that that's actually currently under consideration. And, you know, given the status of the airlines, not just in India but elsewhere, I'm not so sure that you'd be able to induct a lot of capital. But I see no reason why we shouldn't open up airlines to some foreign investment.
Let me put it like this. Suddenly, there seem to be on the table 3 or 4 measures that have been talked about for months, if not years, and the focus of attention suggests that they could be happening now. We've got clearance for FDI in pensions. The new manufacturing policy has been agreed by the cabinet. You're talking that there's a serious hope of FDI in retail. What message would all of this, if it does happen, send out to the world about India, its government and the economy?
Well, I hope it sends out the message that some of the negative messages of, government doesn't want to do reform were not well founded. Let me say, by the way, that this whole focus as if we don't want to do reforms is somewhat it's an exaggeration. I mean, when the economy slows down, people immediately look to reforms as if doing some reforms will speed it up. I mean, remember last year, 2010, 2011, when people said that, well, we're a bit slow, the economy grew at 8.5%.
But this year the economy is not growing at
Exactly.
8.5. And the reason why people are skeptical, if not totally doubting, about this government and reform is because critical things like GST and DTC, pension aside, banking and insurance are either stalled or stuck. We now know that GST won't happen in April. There's talk in the papers that DTC may not happen in April. So are these irretrievably stuck in Parliament, or can they be expedited?
Well, let me respond to that. It's an important question. When you say irretrievably stuck, major legislation which changes major systems can take a bit longer than people think.
GST could be delayed by 2 years.
But we set targets hoping that it can be done quickly. As far as DTC is concerned, it's more like encompassing enshrining what is the actual law into a new legislation. I mean, the tax system is pretty much there. The direct tax system, which is there, will just get enshrined in better legislation. GST is a very, very important thing, and I think it involves a constitutional amendment. By the way, they haven't said that it can't happen in April 1 doesn't mean it won't happen during the year. It might take 6 months longer.
I hear your assurance, but the problem is critical people who are your major investors and industrialists like Mukesh Ambani, Azim Premji, Deepak Parekh, Jamshed Godrej have all come out at various times in the last couple of weeks saying, and I'm quoting, that there is a complete absence of decision making.
I've seen
They're complaining about policy paralysis.
Well,
they don't accept your explanations. Why should the world outside?
Well, maybe after a few of these measures they'll change their mind. But let me say that I think industry has been focused a lot more on decisions that are holding up infrastructure, not these reform issues. I mean, they're also important. But it's something the government is very keen on, and a lot of work is being done in the government, is how to unclog projects in the energy sector which have got stuck through one or other implementation sort of hurt.
And many of those are environmental clearances that are holding up projects. And
But
even the change of minister doesn't seem to have made too much difference.
No, that's not actually fair, because we have an empowered GOM presided over by the
Look
finance
at the process
minister.
Lavasa had to go through to get its clearance.
If you're saying that things are not moving as fast as they should, you're absolutely right. In many of these projects, let me say, what has happened is projects have moved ahead without getting the clearances they should have got. And it's been difficult to determine how to sort of find a solution. That's certainly true in all the environmental clearances.
What you're suggesting is that there isn't a proper process and procedure for clearances. 7 years after the UPA government came into being, if that is still the state of affairs, then it's a very sad testament on that government.
No, when you say there isn't a proper process, actually there is a process, but I think that process was not always followed. And very often, promoters of projects didn't rigidly follow the process, thinking that, oh, it'll be taken care of later.
Everyone looks for shortcuts.
And I think what's happened, to be quite honest, is that the public wants a much more transparent adherence to rules. And so if rules have been framed in a particular, even if those rules are not good rules, and very often they're not,
follow them nonetheless.
you follow them or change them, and that, it is a cost. I'm not saying that we haven't borne a cost, but we're aware of the problem and we are taking corrective steps.
All right, you say you're aware of the problem, you're taking corrective steps. My last question, we're talking today about the possibility of reforms. You're hopeful that FDI in retail could happen. What if it doesn't happen? What if the year ends without these reforms happening and the hope of today is quashed? What message then goes out?
No, I think let me step back. A lot of the focus on reforms is not so much that the economy can't grow at 8.5% without reforms in FDI.
It's not growing at 8.5%.
It isn't, but it was last year, and there was no reform
But
in
it
FDI.
needs reforms to go back to that rate of growth.
No, I don't want to underestimate this, but in my view, the most important thing we should do is to take care of bottlenecks in the implementation of investment projects. The second thing, quite honestly, is that investment spirits are down across the world.
Revive them.
And yes, but when you say revive them, I mean, do whatever you can to make India look good. Reviving them is going to be a global event. Okay. I mean, we can't counter all
Do what you can to make India look good.
Absolutely right.
On that, a pleasure talking to you.
Thanks, Karan.